Okay, welcome back to Loans Elevated. So a recession is looming, or is it? Well, economists can't agree for sure, but many economists, the news, we hear it blowing up, is a tall tale sign that the 10-year Treasury bond and the 2-year Treasury bond has inverted. What that means is the 2-year Treasury bond, which is a shorter term investment, is now paying a better return than the 10-year Treasury bond, a longer term investment. This is very counterintuitive because you expect if you put your money somewhere for a longer period of time, a longer investment, you would expect to create a bigger return than tying your money up for a shorter period. Well, this is a tall tale sign, historically speaking. Since the 60s, every time we've seen this happen, it has led to a recession within about 12 months. I don't know the exact figures, but it's led to a recession. So I believe, based on the economists that I follow closely, that a recession is actually looming. And what does this mean for real estate, home prices, mortgage rates? Well, what I've been coaching my clients on, this is based on, I obsess over this stuff. I go through, I watch reports every day. I'm constantly reading, talking to my financial planner to pull on his ear and get his insight. But really, historically, what it means is, since the 60s, what we've seen is post-recession, and especially a recession like this one, where the Fed is required to be fighting inflation. They are doing everything they can to help curb inflation. And when recessions come to fruition with that ingredient, it is pretty much always led historically to a drop in mortgage rates by about 30 to 50%, which is a really big deal. That's from peak to trough. Now, we don't know if mortgage rates have stopped rising or not. We're sitting near 5% today. This is April 2022, and we're sitting near 5% today. What that means is say this is the peak. That means we might see mortgage rates drop back down into the mid-2s, which is significant. Now, what does this mean for home prices? Because that's the question I oftentimes get from my clients, and I'm sure many of you have this same question in your minds. Does this create a bubble? Am I going to lose money like 2008? It's baked into our memories that 2008 brought so much turmoil financially to the world, but also people much closer to us, our families, our grandparents, whatever the case is. So many lost so much. Fundamentally speaking, today's economy has nothing similar to 2008 in a real estate perspective. Nothing is similar to 2008. You think back then, we had an oversupply of homes. Builders were overbuilding. There weren't even enough households to fill the inventory that was in the market. And then 2008 hit, and we stagnated in the market for nearly a decade. What that caused was a massive undersupply of housing because people kept having babies and homes, people kept aging and households were being formed. And so today, from a fundamental perspective, the biggest one in my opinion is the complete opposite of an oversupply. We have a dramatic undersupply. And if you're in the market looking for a home, you know this like nobody else. It's so difficult to get something under contract. Now, the other big important factor is mortgage companies, people like me, were qualifying home buyers or borrowers for loans that they should not have been qualified for. There was no income, no assets. It's like basically you come in, you breathe on a mirror, and if you fog it, you're a living person, you get a loan for whatever you ask for. It was craziness. Today, the mortgage industry has corrected itself, and we only give loans to people that actually qualify for loans. And even if there are some more flexible guidelines, because there are some unique options out there that people qualify with unique situations, self-employed people that don't have all the taxable income, those things. But the fact is, to qualify for those loans, you generally need a dramatic and significant down payment. So we're keeping that in order. Back in the day, these people who didn't qualify or maybe had more marginal qualifications could still get a 100% loan, and oftentimes those loans weren't even fixed. They were fixed for maybe like a year, and then suddenly the payment skyrocketed. Essentially what was happening is people were gambling on real estate, continuing its massive appreciation rate. Today, we are not doing that. It can't even happen. So home prices, where I started this whole ramble. What this means for home prices, historically speaking, I actually have a graph. If you want it, feel free to hit me up. I can share a picture of this graph. It's crazy. But what we've seen since the 60s, recessions have led almost always to increasing home prices either during or shortly after a recession. And they only really plateau. If they're not increasing, they're only plateauing. The only anomaly to that is 2008, and I just shared a lot of information as to why we saw that happen. So a recession is very likely looming. But what is the big takeaway here? The big takeaway, in my opinion, is that you can never time the perfect time to buy a home, right? You never know when rates are going to go up or down. You never know when home prices are going to go up and down. But long-term home prices tend to go up, and interest rates are kind of all over the place depending on economic conditions. So what I say is, do not hesitate. Buy now. The opportunity you have today is to lock in the home prices today. And despite the rates being higher than we really want, there is light at the end of the tunnel. If this recession does come to fruition, which it almost certainly seems like it will, we likely, based on history, we will likely see mortgage rates drop dramatically. And that's where you can bake in your savings through a refinance, which is very inexpensive and easy to do. You can lock in long-term savings on the mortgage payments through a refinance. But what you cannot do is get the home prices from today a year or a year and a half from now when that opportunity, that refinance opportunity presents itself. So anyway, I think buy now. It's a crazy time. There's a lot to it. If you want more information, I'm happy to talk in more depth, share these graphs, share the data that I'm studying all the time to help you make the right decision. But thank you for tuning in. I hope this was helpful. Please share and follow my page at LoansElevated.